Good morning to all traders and welcome to another Markets in Waves. Interesting, as we were expecting yesterday, the session with some changes having to take place due to structures breaking. Starting, of course, with the US index, and then we're looking at the euro dollar, which the structure still remains the same as we expected. Pound, break to the downside, then oil, as expected, leading diagonal down, and gold. Although I still haven't changed my main, I am going to show you an alternative today. That's why the charts are going to look a bit different. So starting with the index, guys, we were talking about this potentially because of this sort of somewhat corrective structure. We were talking about potentially that moving higher, right? So with that fresh high done, looks like to me that we are on a 1, 2, 3, 4, and we expect the fifth wave to finish. Now this wave, because we've got 1 and 2 here, and internally we've got 1, 2, and 3, we're probably going to get the fourth and the fifth for 3, and then we're going to get the fourth and the fifth. So this wave, it's still not finished. It looks like it's a multi-structural move to the upside, okay? And as I said, it probably means that we are still in wave 3 of 3, okay? And then we can get the fourth and the fifth, which means more upside can be seen. Where to? Maximum, in my opinion, 94.70, maximum. But with the third of third being here, I think that's going to be even lower than that. We were looking at this also to potentially become some sort of triangle. It's still possible, but with that move to the upside now, it will really have to drop hard to do wave B here and then move all the way up. I'm not so sure that's the case. Over here, though, we do have a very nice flat. Yes, I know it looks like third is the shortest, but it's not. Which means after that flat, now we can expect this 1, 2, 3, 4, and 5 move, right? Now, alternatively, don't forget that we can still get that B in the A. We'll get the B, and then we can get the C. That will be wave 1. Then we might get 2, then 3, then 4, and then 5. And that might end up being a diagonal. And this sort of structure means that we're going to be here for a few more weeks, not to say months. Probably weeks, yeah. And it would also fit a little bit better the duration of wave A, because we need to look at these waves, obviously, not just in terms of price, but in terms of time. So that's for the index. Obviously, in the shorter term, you can go ahead and place your channel over here as well, just to get some sort of guide of where prices could be really heading. Euro dollar hasn't done anything extraordinary, so we are still expecting this to end up being some sort of ending diagonal over here, okay, and expecting a lower low for that, of course, to be the case. Now, where this low is going to be, we do not know, but we have these levels marked anyway. We've done pretty much well, it's a triple bottom over here to be fair, but from a structural perspective, but from a PA perspective, we haven't seen a lower low yet, okay? That remains to be seen, and it might actually come today, who knows? So expecting this to end down in either 2 or B. GBPUSD, if you remember, we changed this particular scenario recently to a triangle over here, right? You remember this? And we're expecting that to start moving higher now. Well, given some fundamental support in it as well, maybe it was a bit biased. Who knows? Sometimes it can happen. Now we're going back to the flat. Okay, that's the A. That's the flat in B with an open diagonal. And we're expecting wave C. To me, we can see this 2 different ways. One is this is 1, 2, when I get 3, 4, and 5. We're going to break below the previous level that we are eyeing, which is, just to be precise, it's the minor wave 1, okay? We still can move all the way down to intermediate wave. So that's not like a level that we should not break. It's just a level that might deliver us some sort of support, okay? And it's very likely to be the case, to be honest. Now, on here, the other scenario is that we could have done this 1, 2, 1, 2, 3, 4, 5, 3, 4, and this is 1, 2, 3, 4, 5. We're going to get there, and that's it. That's going to be the end of 4. Okay, so either that we expect the 5th of the 5th, or either that we are on the 3rd or 4th of the 3rd. Okay, either way, here as well for guidance, channel and A, okay, for further downside, of course, that is. The oil has done what we expected. This overthrow is accepted, it's not too much. And we had the miss at 1. That's why I said maybe even yesterday I mentioned maybe as an overthrow would be a bit too much. So we've had the first attempt to 76.95, which is the previous low high. So now I expect to see a correction. And the truth is that leading diagonals, and should that be, of course, the case, we'll find out, tend to be followed by corrections of about the 78, 79%, right? So that means that we might see that actually going all the way back to 65 or so, okay? So prepare for some downside here, but on a different note, don't forget, we've also explored the possibility of that being 1, 2, 3, 4, and 5, right? So as long as we remain above 73.15, that looks bullish. Okay, could be multi-structure move to the upside. On a different note, an alternative that not going to make much sense is that this is going to turn into some sort of, who knows, should I say like a flat, since we're done over the 90%? Could be the flat, but a flat is not very likely, because the W, X, Y, X, and Z situation might not really look like it's the case, since we've really broken the 74.30, which is above the previous, the X1 wave, let's say. It's the final X and also the primary X, okay? It's not that it's impossible if we follow the guidelines, but it's less likely. And gold, don't let this trick you. It's not my main, okay? I'm just showing you what another potential could be bringing us, because so far we haven't really had a deep correction, okay? That's the truth. So 17.13 is a very nice level to consider that correcting. 1, 2, 3, 4, 5 still remains my view. W, X, and Y perhaps, and then we move all the way up, which means, you know, this is 1 and 2, which is part also of a intermediate wave 3. Don't forget that. Okay, so if we move up, we'll break, that will be the 3 of 3. Let me just go now a little bit further out to show you what change I made just to support an alternative to the downside. Okay, that is seen as a W, X, and Y, with W being an ABC with an open triangle over here. Since wave E is not crossing above C, we're good to go with that. I've got an ABC for wave X, which is a simple zigzag, which is usually the case, and that's fine. And then we've got an A down here. We'll call this a B and a C. Okay, that is a potential alternative, but a closest alternative, if we look at the duration of this, would be that if this is an A, then my B would be something like that, right? And then I would receive my C. Because if we compare the duration of any of these waves, apart from the zigzag, which can be sharp and quick in X, and that is fine, then wave Y, well, should really be closer in completing the duration of W rather than anything else. So yeah, you might say, well, what does that mean? It means that, as I said, most likely we're gonna stay here for a bit, yeah, and then gonna get the other wave down, so that we are a bit more closer to the duration of W. Now, you might notice few structures not looking really nice. I mean, we are in gold markets anyway, not supposed to look nice. They are commodities, the liquidity is not as high. And I've also got a truncation over here. And this truncation I have because it makes more sense for a 5-way move down here and for an ABC up here, okay, just to support this. And it wouldn't be, I mean, we do still have 5 waves here anyway. And if we take into account the 1, 2, 3, 4, and 5 over here, it's very well expected to be the case. So guys, that's going to be all for today. And thank you very much. Don't forget that it's today and tomorrow to close the month, Q3 of 2021. Take care, trade safe, and we'll speak again tomorrow.